All right, guys, this is Sentient Trading Society. This is Ron speaking. A lot of people have been asking, hey, how are you setting your targets for the trades, especially after today? It was a wonderful trading day. People are wondering, how do you set your targets? It's something that I've been asked multiple times. I've laid out how I set the targets to individuals, but not as, universal for everyone to see. So right now what I'm going to do is I'm going to switch to a chart that I don't use anymore. It's been a while. Okay. But just know that this isn't a strategy that I'm actively trading, right? This is just random setup so I can show you how I set the target. So I'm going to say, if I entered here, this is how I do it. And the rules are consistent. The strategy is completely mechanical. All of my systems are completely mechanical. There's no intuition. There's no discretion. So I'm just going to dive into the rules so you guys understand it. And I'm going to edit the video a little bit so you can see some screenshots and I break it down what you're actually looking for in the charts when you're setting targets, right? So for systems that are beyond the 15-minute, for Dow Jones, what I like to do to keep the costs low is the minimum target size will be 100 points. And it's not because of this or that. It's not an intuitive thing. It's to keep my costs in check, right? So I keep it 100 points as a minimum. And if I'm using a ratio of 5, that means that my target minimum will be 20 points. And I could say all of the costs, cumulative put together, including the spread, could be reflected as 2 points. So 2 points cost, it's going to be around 10% in trading costs because my minimum stop loss size will be 20. But what I like to do for costs, I try and have it as a constant because obviously I know that there's going to be many trades where the stop loss size is going to be beyond 20, right? But I'm still going to assume in my back tests that my costs are going to be like that. And what that does is harsh on the data set, but it's not only harsh on the data set, but it gives you room for error and other unexpected events like slippage in real-time trading. Because you could have, positions where your stop loss size is like 30, 40 points. Obviously, that's going to reduce the cost by a lot because the spread and everything is consistent. If you're on a good broker or in a good prop firm, you should know the spreads before trading. That's very important. But you'd have a good idea of what arena you're stepping into and what spreads you should be expecting. Okay, and like what trading costs you're expecting. So you need to keep those costs in check. You cannot be having targets of like 20 points when you're going to have a 5-point stop loss. That's just not going to work. So you need to keep this in check, and you're going to see this for the targets. Okay, so 100-point minimum. Right, but I'm going to explain how the targets are set because I feel like I'm rambling on a little bit, but there's no script for this video. There never is, really. So here's what you're looking for. You are looking for the inversion of 3 wicks, but you're not really looking for that. You're looking for clusters of wicks. So if you're seeing 3 wicks where they're not covered by bodies, which I might have to show some screenshots of invalid and valid, in this video, right? But I'm going to be showing you some valid places where I'd set the target because it's very simple. You want to look at clusters of wicks. You want at least 3 wicks, right? For example, this here is a wick cluster, and we always aim at the most extreme wick that's a part of the cluster, right? So you see this, the body was covered, so it's not a part of this one because the body covers this one. So this is not the start of a wick cluster. Like this one I've got selected right here, this is irrelevant completely because you see that it is closed in. It's not a part of it. But if this body was starting somewhere around here and the wick was here, then it would be completely valid. But I'm going to have to give some screenshots so you understand the rules completely because it's very simple. Once you get a hand of it, you do 3 targets, whatever, like you're going to be on it. You're going to be completely on it. And let me just get back on track. So this would be a valid target to aim, right? But you're going to be aiming at the most extreme value part of that wick cluster, which is here. You'd be aiming there, but obviously that's too small because if I was to set my target there, how much would it be? Like 27.5 points. Like this is why the minimum rule is in place. But this would also be a wick cluster. So the wick cluster, it starts here. There's no body covering it, right? And the most extreme is here. So we want to be aiming here. But that's 61.5. The target is not big enough right? But here's the thing: you want to know all of your wick. You only want to know the ones that are going to be valid to your entry. But you would know where you're aiming before the second candle closes, because look, wick rejection. You would know where you're aiming. This would be a limit order entry. So you're entering on wick one. You're entering on wick one's price on candle 3. If it doesn't fill on candle 3, the order is set to expire. It automatically closes. Right? But look, here's another one as well. So you have the swing high. Right? Doesn't need to be a wick cluster, but you have the swing high, which is the same principle. Right? It can literally be 2 bars, but the wick clusters, like in the middle of the price, like in the previous trend, it needs to be at least 3. So, for example, there cannot be 2 wicks. So I'm going to try and show you an inversion of some sort. So, for example, here, this would not be a wick cluster. Not at all. So you've got a body or wick, it doesn't really matter, but it's followed by here. There's not an additional rejection that's connecting anything to this cluster here. So it's only 2. You need at least 3. Right? But the only place where that changes is when you have swing highs or swing lows, where there's only 2 candles. But I'm going to show you those in a second. I'm going to try and find it in the chart. But look, we've got the swing high marked here. The most extreme price point is up there. That's a valid target. Where we're going to put our stop loss, it really is up to you how you set your stop loss. It needs to be logical. But for this example, we're going to use a fixed ratio of 5 for every single setup I draw, so you get an idea. A fixed setup of 5, and we want it to be basically one entire movement beyond 5 to make sure that you actually get it accurate. So it's actually going to be something like this. And we want it to be consistently like that, okay? And for the swing highs, I need to try and find a swing high, and then I will make an entry. But here's an example of a swing high. So you've got something like this. So you've got a move up, and there's like an inversion for the shorts, but you've got a move up, you've got 2 wicks, and then there's a reversal. So there's a close followed by another close. So you got a wick, and then there's 2 closes against the trend. That would be a swing high, and it's only 2 wicks. And it doesn't even need to be 2 wicks. If this was a body, so if there was no wick, and then there was a wick rejection, then it's completely fine. Right, but you'll sort of have an idea of the rules. I'll try and quantify it in paper for everyone to understand, so everyone knows what the specific rules are. Maybe I'll submit a document, but this is just me showing you how I do my targets for now. But that's another target. That's another example of a swing low. So you've got that candle is moving down, and then you've got 2 candles. You got the wick rejection. You don't even need the wick rejection, but there's a reversal and it's held for an additional candle. That would be a swing low. So if you were short somewhere around here, you would be taking profits at this low. It's the most extreme part of the cluster. And the main thing about this is you want it to survive for an additional candle. It doesn't matter if it's a bearish candle or bullish candle. It really doesn't matter. What you need is this criterion for the swing low. The main thing is these are prices where there's been excessive buying or selling activity. So these are liquid prices. That's why we pick these over every other place, because we know that these places have been liquid before. So we want to engage in those prices. We don't expect it to reverse or continue. That's completely random. All we know is there's going to be heightened buying and selling activity at these levels. It's more likely than not. That's the reason that we use it. Because you've got a cluster of wicks. That's liquidity everywhere. These are liquid prices. The market has shown you it's irrefutable. There was wicks here. There was sellers there multiple times. So this is a wick cluster, for example. Right? So there was selling activity multiple times before it reversed, multiple times. And we want to get out at the peak. So you're going to get the best stop loss if you use a fixed ratio. So if you're aiming target first and stuff like that, if you're using limit orders, you're getting the best fill price. you are getting the best stop loss if you're aiming for the extremes. That should be met anyway. And you are executing at prices where the market has previously been liquid. Like, I've used this since late 2020. This is how I've been setting my targets since late 2020, and it's been effective for multiple strategies.